Welcome, this is BQ Prime. I am Agam Vakil and we are having conversations around quarterly earnings. This time we're tracking Dr. Lal PathLabs. We've seen another steady quarter come through, and while we have seen that steady double-digit revenue growth coming in, what's really surprising is also the margins expansion, which is significant. And on account of that, we are in fact looking at a near 53% growth in the company's bottom line on a year-on-year basis. Now, to take us through the quarter as well as what we can expect going forward, we have the Chief Executive Officer of the company, Mr. Bharath Uppiliappan, who's joining us on the show. Bharath, good morning and thank you so much for joining in. Let's start by talking about your assessment of the quarter. Well, we have seen good growth come in, and I reckon a lot of this is on account of the strategy you guys came across and have built over many months and years. What's really playing out in your favor, and what's the way forward here?
Good morning, and thank you very much for having me on the show today. Wish you, our families, and the viewers' families a very joyous and healthy festive season. We had a robust quarter 2, and we are very encouraged by the matrices we have delivered. Our revenue growth came in at 12.6%, but if you look at net of RT-PCR, which is a test which is no more required in today's context, our real growth is about 14.4%. All our geographies did really well, including Delhi NCR, rest of North, UP, UK, East, South and West, all turned in good numbers. And we are kind of encouraged by the pan-India, growth profile, which have come through. We're also encouraged by the fact that Suburban, after I think 6 quarters, has delivered strong double-digit growth. And West is a very key market for us. And as we look forward, we would like for Suburban to grow even further from strength to strength and build a very robust business in the rest of India for us.
Right.
From a product perspective, I think our bundle test portfolios, First Fit and Pro Select Suburban, delivered very strong performance with over 21% contribution. In fact, the combined revenue number is now 125 crores for the quarter 2, and which translates to, let us say, 500 crores run rate for the full year of an annualized basis. That is really encouraging.
Right.
Second, I think we are really proud of the way our super specialty portfolio has done, which is the esoteric and high-end testing, which further builds our medical excellence. And I think between these two and also a bit of favorable, what I would call seasonality, we were able to deliver these numbers with strong operating leverage.
Right. So, Bharath, my next question is to do with your overall margins, and this has been a substantial, improvement on a year-on-year basis. The question really is that where do we go from here? What are the factors that are contributing to the margins? That's the first part of this question. The second part is, as we move into the second half, will there be some amount of seasonality which may perhaps change the product mix, and hence would that mean any changes in margins, or is this level sustainable going forward into the second half of the financial year?
Agam, I think the way to look at our margins, look at an annualized basis and not on, let us say, quarterly basis. Because in a quarter, there is season, there is a lot of other moving variables. This quarter has been helped by very strong operating leverage of very high volumes flowing through our labs, and also some of the productivity initiators really kicking in. Now, we would like for a healthy margin profile and not something which we really want to improve margin profile further too. So about 26% margin profile is what we think is a good margin profile for this kind of business. And anything else we should actually be flowing back in the business rather than trying to maximize the margin profile beyond a certain point.
Right.
So a key focus would be on driving the volumes up. We are taking a lot of initiatives on digitization. A lot of tech stack has been developed, and we'll continue to invest in building that further. We are announcing about 20 new labs in Tier 3 plus cities with a host of collection centers and market activation program to really build scale in India, which is underserved. So I think we have a lot to do on our plate to grow the business further, and our focus is growth rather than margin maximization. Yes, we will keep a healthy margin profile so that we're able to reinvest back in the business. But yes, this first half margin should not be taken as a representative margin for the future.
Right, Bharat, in terms of your revenue growth, clearly a considerable amount of this growth is coming on account of tier 3 and tier 4 towns. It's very, clearly been made available in your investor presentation as well. My question is, when I want to talk about tier 3 and tier 4 towns in just a bit, but before that, when it comes to some of your larger cities and towns, you're also expanding your footprints there. My question here is, when it comes to your larger cities and towns, is that what kind of saturation are you already seeing, if there is any saturation at all, and if there is no saturation, what is the scope of growth in these cities? And by these cities, I mean also something like a Mumbai, Delhi, Calcutta, and the other metros.
Right. So I think we are playing multiple games, Agam. So there is a tier 3, tier 4 game we are playing. There is a metro city game we are playing. There is a tier 2 game we are playing. There is a west game we are playing and a south game, which is very different.
Yeah.
So I think we have as a company, got used to playing multiple games all at the same time, thanks to the talent pool which we have built in and the operating processes. Now, to your specific question, we have seen good growth in Delhi NCR, which is the strongest market we have. In spite of a very large base, we have delivered handsome growth in that market. And all the other metros also, like I said, suburban, which is predominantly Mumbai, Pune based and Goa based, has also delivered double-digit growth in this quarter. So I don't think there is, let us say, a slowdown in metro cities and we are moving to the tier 3, tier 4 cities. But take it as that we want to play all possible opportunities. And given the bandwidth and the resources we have, we are focused on executing the same.
Right. Would it be safe to assume that when it comes to some of your Western market, large cities like Mumbai, Pune, and Goa, you're leveraging more of the suburban facilities and units because you have, well, suburban is already present in these cities?
Yes, indeed. So let us put it this way: both the brands will provide synergy to each other.
Right.
So there is a lot of synergy which Suburban provides to the Dr. Lal PathLab brand name, and vice versa as well. So I think this whole equation is about maximizing the benefit for the clinicians and the patients. And if you keep focused on that, I think we'll come out to have sustainable growth in the future as well.
Okay, but finally, I want to ask a question of whether or not revenue per test is a good metric to judge Dr. Lal PathLabs on. The reason why I ask you is that you do have bundled products. Of course, you also have SwasthFit, which contributes to nearly a fifth of your overall revenues now. What is the correct metric that you would assess the company to, in terms of, your unit economics going forward, and how would you assess that?
So, many industries operate in unit economics, especially the startup world, and we're all getting, kind of what I would call carried away by those. But really, this business is about scale. It is about maximizing throughput to a fixed cost, because all our lab, people cost, digital IT infrastructure, all fixed costs essentially, right? So think of it like a telecom business where more maximization of the spectrum you do, your profits or let us say your utilizations go up, and hence the whole P&L leverage comes in. Obviously, you have to be careful not to choke your labs to a point where service levels degrade. So I would say that one must be focused on the patient life cycle in its entirety and getting more number of patients. If you do these two well, I think you would have a very strong operating leverage like we demonstrate in our business.
Okay, Bharat, we'll leave it at that. Thank you so much for joining in and taking us through the quarter's earnings as well as what we can expect going forward. We wish you the best for the future. A happy Diwali and a prosperous New Year to you.
Thank you, and likewise.